is there enough lightning from my angle? Like when you see my, do I have enough lightning?
I think it's okay. We'll see. We'll see. I'll just let's go with this. Let me just set it
Let me
up.
see.
Okay. Okay, I'm going to post the link and we're good to go in 2 minutes, approximately.
Cool. Mm-hmm.
Okay, I'm going to post it to Discord as well. Announcements. Oh, I can't do that this way. Okay, no problem. Okay, it's going to. We can start soon. I'm just going to post the community and then we can dive in. People will join along the way. Okay, perfect. Yeah, everything's working. Unlike last time when we had kind of technical difficulties.
Yeah, well, I'm sure my mouse is fully charged. We should be all good.
Yeah, it happens. It happens. No problem
Yeah,
at all.
it was like everything was going wrong that stream. My mouse died. I don't know, my camera, my internet was slow for some reason that day. My kids, my boys were trying to come through the doors. It's like oh god.
Okay. Okay, let's give it a minute and we can dive in. You can then
Yeah,
start, Ken.
all good. We.
Okay, I think you can kick off, Ken, and people will join along the way while we're having the live trading session.
Awesome. Awesome. Okay. Well, happy Wednesday, everybody. Happy hump day. Let's jump straight into this. I'm just going to share my screen now. Okay. Share the entire screen. All right. So, guys, look, there's no doubt see a lot of volatility the commence of the week, right? I'll just obviously, as you guys know, I like to paint a picture. So I'm going to paint a picture. I'm not going to go too far back. I'm just going to go back from sort of last week. Now, obviously, if we just take a look at the Dixie's performance at the moment, we've been on a push to the upside, but still ultimately respecting this sort of bearish structure to the south of as I've been going over the last couple of streams. Now, this latest push here that we had on Monday, right? Ahead of Monday, we had talks over the weekend, Saturday, US and China in Geneva in Switzerland, their officials trying to hash out some sort of progress, with this ongoing trade war, right? So you would have seen the publications. We covered some ground on it via the weekly analysis video. But these guys made progress. Then on Monday, okay, we saw an agreement. Okay, we saw an agreement. US and China agreeing to have this window, this 90-day window. But then during this 90-day window, tariffs were slashed. Okay, so here, if you have a look at this graphic here, so United States, their tariffs on Chinese goods have dropped down from 145% down to 30%. And then we had Chinese tariffs, which were at 125% on US goods, dropping down to 10%. So that was significant, okay? That was massive, which created a relief rally for the dollar. It was relief. Because if you remember, again, painting the picture, this downside that we had from March, which was intensified by the trade war, US and China trade war. So dollar was in the snowball downside. Markets were optimistic heading into this. Obviously, the news comes out, surprised everyone on Monday, big upside pressure for the dollar. You would have seen, obviously, if we look at I'm going to go over in a little bit more detailed technicals with some things on my watch list. But generally speaking, if you look at safe havens, like all the yen pairs, shot to the upside. You saw Swissy pairs shooting to the upside. Gold initially and has still remains on the back foot, because what this has done is created risk appetite for now. It had done for now. Because at the end of the day, there's relief over the two largest economies in the world going head to head with a trade war, which is not good for anybody. Okay, especially obviously those two economies. And you have to remember as well, it's not just the US and China that it affects, those tariffs, because we still don't know the damage yet of the initial window that we've had of these tariffs. We still don't know the damage. But it has a domino effect, right? You have to always think like this. It's not just, don't be narrow-minded and think, oh, this is just about US, it's about China. No. This is about Australia. This is about New Zealand. People who do business or are reliant on China. Is thinking from a bigger picture and seeing how that has a domino effect across asset classes as well. So anyway, dollar obviously enjoyed the upside, but now we're under a little bit of pressure. So you're probably thinking, why is dollar heading to the downside right now? Just to put it short and sweet for you guys, and I was just speaking to quite a few of my contacts as well, just to gather some different perspectives. And it's at the end of the day, these guys, we have to take this with a pinch of salt, because if you look back, right, the previous trade war, Trump's previous presidency, we had things like this. We're like, yeah, we're best friends. Let's kiss, let's hug. And then the next minute we're enemies, we're worse enemies, and then they go tit for tat again. So the markets, what they're doing is they're taking it with a pinch of salt. They're not getting too excited because they know, based on historicals, what has happened in the past, they're not getting overexcited. So that's why people are not committed with this dollar buying right now. And when you look at it, as I said on the previous streams, guys, we're still respecting structure. There's no break of structure here, right? There's no break. So don't forget not to get sucked into all this. So, when you go on the 4 hour, you're like, yeah, man, we're in a bullish trend. The dollar bounce is here. The buyers are back. Then when we really think about what I just said there, about how this can turn south at any given moment, and market's job as well is not to always react when it happens, right? The smart money, the big boys, are playing out scenarios and trying to price things into the market now. So that's why we're not seeing that full commitment for the dollar, because they're understanding that there's risks here. Okay, there's risks. So when we look at the higher time frame anywhere in a monthly, remains bearish. Look at that. That bearish candlestick in April, we still look vulnerable technically. If I just strip out my fundamentals for the moment, this still screams we need to head to the downside a little bit more. Feel that wick of last month. The way that this stage is a rebound is I need to see a reversal candlestick. I need to see some sort of doji. I need to see a pin bar, a big bullish engulfing once we've swept these lows. But right now, I'm not getting sucked into, that 4 hour where we're pushing to the upside or the daily. I'm focused on this higher time frame and just expecting the rallies and the pullbacks as we're seeing in this at the moment to be sold. Okay, so that's that for the dollar. I'm going to jump over to GBP because I was in some longs this morning. I did take some longs, which I've been stopped out now at break even. I did take some partials, but I'm going to walk you through this trade because it's sort of fundamentally worth noting right now, because I still see some upside for this, as with some other dollar pairs, which we'll get onto. But fundamentally with the pound, right? For those that don't know, last week we had the, sorry, this is Forex Live. Let me just bring up Forex Factory. last week we had the Bank of England rate decision. Right now, I want you to stay with me here, guys. It's really important to know. Okay, really, really important because it's going to help you potentially with a fundamental bias for the pound, not just versus the dollar, but we're going to look at some other pairs in a moment, some things that are on my watch list for trades imminently. So last week we had the Bank of England rate decision. Okay, there. I don't think I mentioned this in the last stream because we hadn't seen results yet. So with this, you see this here, guys, just for your understanding, educational, right? Markets were expecting, this here is expecting 9 members to all vote for that cut. This cut where they cut by 25 basis points. All 9 members to vote for it. However, the actual, we only saw 7 members voting for the cut, and there were 2 dissenters. 2 people that are saying, no, 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 we shouldn't cut yet. Let's keep unchanged because of X, Y, and Z, which we'll talk about. So that was not seen as dovish because not everybody wanted the cut. If everybody wanted the cut, then yeah, fair, dovish. But that wasn't the case. So this is actually bullish for the pound. Okay. Now, I'm going to come back to that in a moment. I also just want to show you something, and this is where it's about paying attention to what central bankers are saying. So this, one moment, I'm just going to get this up here. Markets, central banks, here we go. Here we go, Bank of England's man. So this is Bank of England's Catherine Mann. So she's one of the voters. You see where you saw that vote of how many members voting for a rate cut. She was someone that said, no, we shouldn't cut rates right now. Okay. Now, the importance of this as well, guys, is that there's a division. They're split. So then when we get to next decision, you know that it's unlikely to be a case of, we're most likely, I think we're most likely to not cut again. You know, they need everyone to be unanimous when they're voting, typically speaking, when they're making decisions. She's saying that there's an issue with, not an issue, but the labour market's still quite resilient. You know, we saw the other day, was it on Monday or Tuesday, where we're at? I'm just going to show you. Here, look. This is UK labour market data. We've still got less people claiming unemployment, less people claiming unemployment benefits, excuse me, and wages, what people are getting paid, is high. Now, stay with me a minute because we're going to translate this on a chart. So I know sometimes this might be, but look, if people are still getting paid more money, right, they've got more cash, yeah, what do you think they're going to go and do with that cash? They're going to go out and spend. If they're spending, what's that doing to prices of goods and services? Remaining sticky. Businesses aren't going to put down their costs if people are still spending money and getting paid good cash, are they? So this is something that some of the Bank of England members are thinking about. Wages are higher. The labour market's still okay. It's still okay. Like the unemployment rate, 4.5%, is not bad. Okay, it's not bad. It's still relatively low. So the Bank of England thinking, that could bring up, cause inflation to spike higher again. And how do we control inflation? We need to keep rates higher. So we need to just move gradually, not rush to cut. Because if we cut rates, we're going to risk inflation going up again because we're lowering people's costs. You remember their loans, their mortgages, their credit card balances, all of that stuff. So they want to keep rates probably unchanged. Now, why this is important to the chart is it's pound positive. Let's get the pound back up a minute. It's pound positive. Sorry, where do I want to go with that? Just threw myself off. This is my head. This is like 100 things going on at once. Okay, this is pound positive. So I'm just going to go over to the pound a moment. If we go on the monthly, okay, and I'm going to talk you through why I took those longs and why I'm potentially going to be looking at re-entries. The monthly is still bullish for me, similar to the flip side to the Dixie, where it's bearish, but this is obviously bullish. I'd like to see this taking out this top area here at 34. So there's a lot of psychological resistance here stacked up at 134. And I like the way we're sort of knocking on the door. We're knocking on the door. We're not trying to, I know a lot of people calling this a double top, but look, the bulls are fighting ferociously. And it's being accompanied by those macros. Like the Bank of England are most likely to keep rates unchanged the next decision and the next decision. They could hold. If you look at, that's what I wanted to show you. That's why my mind's jumping from 100 things to once. If you look at the last Bank of England decision, as we just had there last week, I just want to show you just so you can see what I'm talking about. Look, so Bank of England from here, 5.25% rates. They cut by 25, hold. Cut by 25, hold. cut by 25, hold, cut by 25. So you can see the pattern. These guys are being very gradual. So the rates are still remaining relatively high. They're moving slowly. You know, there's other major central banks out there that are cutting fast. Yeah, Bank of Canada, RBNZ, you know, RBA are going to start cutting rates soon. And why this is important, because then you got to think from an economic perspective and a monetary policy perspective. If the Bank of England are moving slower than other central banks in cuts, because the UK economy still warrants higher rates, right? Whereas in Canada, for example, the economy's softening. We're seeing worsening labour market, GDP slow. You know, there's still all this volatility with tariffs. UK had a trade deal with the US. So the fundamentals are stronger. And this is where you pick your pairs wisely. And I'm going to get onto GBP CAD in a moment, but you pick your pairs wisely. This currency is stronger than this currency because of X, Y, and Z. You know, that's how you form your fundamental bias. So anyway, with GU here, the reason I took these longs yesterday was that big bullish engulfing here for the candlestick of Tuesday, engulfed obviously Monday, saw us breaking out of this structure in this channel here that contained the price. If you look here, then drop down to the hourly. I said it in my previous rundown, you know, my previous videos. Those that know me, I know a lot of people for some reason poke fun at me because I draw up flags, because I like flags. I like them. I explained to you guys before. You know, these are periods when we're consolidating. You know, the buyers or the sellers, whatever case may be, are taking a break. So I just like to mark that up, and I'm just waiting for that surge of momentum to come through, that volume surge and that breakout for a resumption to the upside. Okay, so I was looking at this. I saw this morning. We had a nice, more or less a liquidity sweep just thereabouts to the Asian range low. Big push to the upside, and then I ended up getting in here. Just once we had, after this candlestick here, this 15-minute, and then I saw this wick here, and I was expecting that's just going to get filled and carry on to the upside. So I took those longs there. Now, I was looking for this to run in towards, like, for me, the next major resistance was up. I was being conservative. Was to go and challenge the highs of May. However, I did take some partials here at 33.50 because it's just a psychological number, and you can more or less see some supply thereabouts. Look, in the past, before we broke through, we had to face some rejection. Then we broke out, retest, reject. So this is a valid level as well. I took some partials there, and then I ended up moving stops to BE. Obviously, now I'm out. But I'm still viewing this to buy. Okay, I'm looking to buy this imminently. Again, I'm gonna mark something up here. I'm liking this consolidation right now, and I'm just seeing this. You know, again, buyers are taking a bit of a breather. What I'm looking for now is a reversal candlestick in here. Okay, so in this zone here, we're potentially going to see it. I'll be ideally looking at the entries on the 30-minute. So I want to see a closure, a reversal candlestick, a bullish candlestick to close above, for example, and effectively we're breaking out of this near-term bearish structure, and then we go and we launch. And then I'll be looking to run that in towards sort of 34. I'll just go up into this zone here, 34.00. So that's what I'm looking out for at the moment. Okay, so it'd be something like this. Longs from here. Okay, place stops just below. So say for example, right guys, we get this, let me just show you here on the 1 hour. Okay, so just so you can see what I'm looking for. We get a reversal candlestick like this. You know, you can view that as a bit of a morning star or just a, you know, a doji. Just subject that to a change in direction. Then we get a big bullish candlestick above. I'm not necessarily looking for it to be that big. I just want to see a closure above, you know, just bullish enough, and then I'm going to be getting into longs. So that's the sort of thing that I want to see. So that's what I'm waiting for at this zone. You know, we've got a valid zone here protecting psychological 33 mark. Again, if we're looking at patterns, you could almost view that as a bit of an inverse head and shoulders. The left shoulder here, the head, the right shoulder there, trying to form, the right shoulder here. Okay, which we've sort of broken out of, and we're just sort of retesting that neckline. Either way, there's support there at 33s. Okay, so I'm looking at those longs at the moment, looking to get back in there, and then I'm going to jump over to GB CAD because I was just talking about GP CAD. Same sort of thing here. This is on the watch list, but I'm waiting for a clear breakdown of 86s. Now, on the weekly, if we go to the monthly we had a bit of a, see, structurally, ultimately, we're to the upside. Okay, as I just explained to you guys before, Canadian economy softening. They've had a mess politically. The growth's coming down. Labour market's worsening. We saw the labour market unemployment rate jumping up last week as an example. Look, if you just look at most recent data last week on Friday, unemployment rate jumping up to 6.9%. I mean, it's the highest that we've seen in quite a while actually for Canada. Yeah, I mean, look, we can go back a long time since 2021. Okay, so it's not good. So we're getting ready for more Bank of Canada cuts, rate cuts, and with them it's more consecutive, right, with their rate cuts. Bank of England more gradual right now. Okay, so I like this structurally. It's so bullish. I mean, if you can't see that's bullish, crazy. Weekly, it got a little bit choppy over these last few weeks, just consolidating, breathing. The daily, you can see momentum regathering to the upside. I'm just looking for a breakdown of this resistance here at 86s. Okay, I want to see a breakdown of this zone because obviously we've faltered here quite a few times now, and I want to see that pushing above, closing above, holding, and then I think this will fly, you know, in towards 91 because there's a massive, not necessarily huge, but there's a decent enough divergence from the UK, Bank of England, from Canada, Bank of Canada, where I can see this shooting to the north. Okay, seeing similar things here, you know. There's no reason as to why we can't see that. The next major zone for me, 191, 190, 92 area. Okay, so that's on the watch list. That potentially may come tomorrow. Okay, or it may. I don't think it'll come today. I think I'm gonna have to wait tomorrow for that because I want to see a nice break above, pull back. Tell me you're holding, and then look. You know what I'm looking for in terms of those reversal candlesticks, bullish closure above, then go baby. So I'm looking at those longs FGB CAD. Let's go back to GU at the moment, see how we're getting on. Okay. Yeah, please.
I mean, it's really bad now. It's really weak. The job market is really bad. Been struggling for about 2-3 years. So there is no strength for the Canadian dollar right now. So the GBP is just gonna outrun it. From fundamentally, technically, the pound is gonna outrun the Canadian dollar. Easy peasy.
I think we might have lost him.
Wally?
Oh, I'm here. Can you hear me?
Okay.
Yeah, okay.
All right, I'll carry on anyway until he gets back. So let me just share my screen again, guys. Sorry about that. Let me get the screen back up here. All right.
Yep.
Yeah. So anyway, I think that long opportunity is going to come today. You know, I'm still keen to see this dollar head to the downside, guys. So looking at those longs for GU, looking at those longs for EU. If we take a look at, let's take a look at some other instruments. I'm going to jump over to gold. Okay, gold's going to be an interesting one. Okay, we've got this massive pullback at the moment, guys, because, you know, look, there's a couple of things. We've been on this massive bull run, as you guys are aware. Big buy momentum coming into play because of, there's been so much geopolitical tension. You know, a lot of geopolitical tension. People have been buying gold as a hedge heading into this new economic downturn. You know how we're heading into a new downturn? Don't forget that. Okay, we're heading towards a recession, and the recession's inevitable, right? We have to go through booms and busts, and we're heading to our bust period now. Okay, so markets are hedging against that. There's a lot of central bank buying of gold. You know, China are buying up I was going to swear, a lot of gold right now. So there's gold buying, hedging against all this risk that's to come, and obviously with the trade war stuff, that just brings a lot of more uncertainty. And obviously with the weaker dollar that we've had, it's helped gold prices to the upside. But we're topping out a little bit, guys. Okay, we're topping out. We ran into heavy supply at 3.5k, and now we're pulling back. You know, we've had a bit of a top trying to get through this 3.5k area. As I said before, it's like a double top, 1, 2. And we're surging. We're having a break of momentum through this neckline. Either way, there's support there around 32.50, 32.25 around here, breaking. Now, I'm going to keep an eye on this. Okay, I'm going to keep an eye on this for some dip buying, and I'll get into why in a moment. So obviously 2025, we've been running to the upside, respecting this, you know, this structure, this trend line. You know, you can see that there for yourselves. Either way, structure is intact. So I'm going to be keeping an eye on this. I think at some point we can bounce and take advantage when we get that next potential leg lower for the dollar. Obviously, that's going to be beneficial for gold. You never know. Fundamentals may just come hand in hand, right, with what's going on technically. We get that bounce. China, US, the talk turns south. Sometimes it just goes beautifully like that. You just never know. We've got to be prepared for these things. So I'm liking with the dollar downside. I'd like to see a reversal here for gold. If this obviously does give way, guys, here, it's going to obviously be free fall mode. Okay. If it gives way, I think what's going to happen, if that gives way for whatever reason technically, and we get, it's just probably going to be stops being triggered to the downside. There'll be a lot of stops there being taken out, surge volume. And I think we'll suck back above and it'll end up being like a fake out. So anywhere here, anywhere in this region, I'll be watching very closely for some dip buying opportunities. Okay. Even if we fake out below, I'm expecting that to carry on and just push to the upside. So my eyes are peeled on gold for some dip buying. Okay. There's still, at the end of the day, as I say, there's still risks that are looming. And this is just heading to the north for me. So let's keep an eye on, in terms of specific levels, I mean, about 3150, even down towards sort of 3100, we could slip to before sort of bouncing. But I'm thinking maybe we'll review next week, see where we're at. But I'm not looking to push the trigger yet. It's going to take a little bit of time. So let's see. Okay, but I'm liking gold buys being an opportunity, dip buying being an opportunity for me. I think, what else did I want to talk about? Let's just bring up the calendar here and just make sure I've got you guys ready, baby, for anything else. UK GDP, this is coming out. Obviously, I've just noted those long positions with potential long positions with GPU dollar and GP CAD. Let's keep an eye on GDP tomorrow, because we're surprised to the upside at that last reading. Previous was revised higher as well. The labour market's relatively sound. Let's just look at what consumer spending's been like. Retail sales. Oh, frick. All right, let's look at this one anyway. BRC retail sales. Okay, good. 6.8%. That was yesterday. Not a high impact one, but that's the British Retail Consortium giving their figures on retail sales. So that was a bullish number. Let's look at UK retail sales, the sort of official number, because I actually can't remember. Okay, that was at the back end of April, 0.4% growth there. And we've seen a decent trend of retailing at the moment, albeit the previouses have been revised lower, but still it's okay. The labour market, which I spoke to you guys about already, is relatively sound, stable. Let's look at UK services PMI a moment. UK services. Why do I always struggle to pull this up? Services PMI. Okay, I'm going to bring up EU flash. Okay, let me bring up EU manufacturing PMI. Manufacturing PMI. Okay, I'm going to bring up the US one. The only reason I'm bringing it up because I know. Oh no. I'm trying to find the UK one, and for some reason it's not finding it for me. UK services. Damn it. I don't know why. UK services PMI. Okay, let's just bring it up in Google News. Okay. The previous reading, UK services PMI, was what? PMI average. So here. So the services PMI, the previous reading, 52.2. Okay, 52.2. That was the previous services PMI. The reason why I'm sort of so bothered about this, guys, is that services makes up over 70% of the UK's GDP, right? So this is still bullish. Anything above 50 is growth. We're expanding. Anything below is contraction. So the fact this is still quite solid above expansion in expansionary territory, I'd like to still see. I know we've been a bit hit and miss with those UK GDP numbers, but I'd like to see a surprise to the upside. I think this is quite pessimistic, zero growth. I think it's quite pessimistic. I know we've seen some bad numbers, but to go back down to zero, I think that's quite pessimistic given some supporting data points of late for the UK. So I'd like to see that surprising even a little bit to the upside. Give us 0.1, and that will help with that GBP buying. Okay, let's keep an eye on that. We've got retail sales, guys, for the United States. Just going back to the dollar for the moment. Obviously, this could be a trigger for a breakout of this, obviously, the structure, this near-term structure at the moment where we're printing higher highs, higher lows. Would like to see that break in structure. Maybe that could happen with those poor retail sales numbers. I'm expecting bad retail sales numbers. The markets are expecting a bit mixed, a little bit lower obviously than priors. Mixed, really. I'm expecting not great numbers because there have been a number of US retailers such as Target in America, Target. Who's the other one? Abercrombie and Fitch. There are a few guys that are noting about cautious outlooks for consumer spending. Why? Consumers have just not been overly confident. Okay, I think we've looked at this at previous streams. Consumer confidence readings declining because of the uncertainty that Trump's brought into play. So people have been reluctant to want to spend, and these retailers have been noting that people are looking for alternatives, looking for cheaper alternatives. So, I mean, I'd like to see that being underwhelming tomorrow. Okay, let's see. Obviously, we trade what we see, but that could be a reason and help us break out of this pullback period that we've had for dollar, and then carry on to the downside. Help our GU longs that we've been looking at. Hopefully, let's see. I'll just go over to euro. Euro's been a little bit quiet. We haven't had any fundamental data this week for the euro. I mean, yeah, nothing major at all. It's just been very much dependent on dollar. All right, dollar sentiment. Look, at the moment we have been bearish on a weekly, been pulling back after obviously the surge to the upside. I'm not overly keen on euro at the moment. Okay, I don't like this price action. I know if I just pay attention to structure, we are bearish. Okay, at the moment, look, you know, these lower highs, lower lows. We're just respecting structure right now. We had a chance to go and break out of structure, but we failed. We failed here. Look, it could still happen, but you see at that sort of previous high area here, you know, we need to take this out. Psychological 113, okay, and then we can run, right? Obviously, I know we've broken out of this channel here, but we need to clear this area here for me to be like, okay, bulls are back, baby. But so far, just not looking encouraging for now. But I'm not interested in trading euro at present. Interested in these GU longs. So still waiting patiently. Let's see. You know, it could just fall through and just dump. But let's see. That's what I want to see. What else do I like the look of? I think that's it for now in terms of that I'm interested in, guys. I haven't overanalyzed anything else. GPNZD. This was on my watch list. Okay, this was on my watch list actually. So let's talk about this. Excuse me. Sorry. So you can see I'm just very GBP focused at the moment. Look, you know, as I was comparing the UK with Canada, New Zealand as well. New Zealand isn't too good. All right, let's just take a look. Let's just see if I'm talking out of my bum. Hopefully I'm not. Let's just take a look at New Zealand GDP. Okay, 0.7%. That previous quarter-on-quarter reading wasn't bad. Obviously, the previous is when you look at these previous numbers, we've been heavily in contraction. Okay, we're deep in contraction here on a quarter-on-quarter. This is more significant. You know, in the UK, we're looking at month-on-month. Quarter-on-quarter obviously gives us a little bit more of a bigger picture of things. So growth hasn't been great there. For whatever reason, we've seen sharp revisions to the downside where we've been deep contraction, okay, which isn't great. Not great. If we take a look at New Zealand labour market figures, let's see what the labour market figures are saying. Okay. All right. Again, same sort of thing here. Been a bit of a hit and miss. The previous readings seen consecutive contractions in the employment change. So we've clearly got a little bit of a bearish trend there. I'm just going to look at the actual unemployment rate as well. The actual unemployment rate, 5.1%. Okay, so unemployment rate, 5.1%. It's been creeping higher, all right? It's been creeping higher. Obviously, we remained unchanged last month. But we're still getting a bit of a worsening in the economic outlook. And there's a bit, you know, in comparison to the UK, there's more of a cloud over New Zealand's head. Because, you know, they're so dependent on that relationship with China. You know, China buying goods from New Zealand, like dairy, for example. You know, New Zealand are a massive dairy exporter. And China are a massive, you know, consumer of dairy. They're a massive consumer of a lot of commodities. You know, they're like the largest. If we look at global commodities, China are the largest importer of global commodities. So anyway, my point is that there's a lot of uncertainty with New Zealand. We've got the RBNZ rate cut next week. I know it hasn't. Forex Factory is not going to have the expectations here, but I'm just going to bring that up for a moment. Let me just quickly bring that up here, guys. NZD, none. bring up NZD. Okay. Bam. Wow. Big. Okay. Gone too far. Hey, hold up. Aha. Okay, excuse me. The RBNZ's at the end of the month. So we've got the RBNZ rate decision. These guys are expected to cut rates again by 25 basis points. So it will cut. They expect to cut from 3.5% down to 3.25%. Obviously, rates are in New Zealand are lower as well. You see in the UK, they're higher. Why I note that is because you have to remember as well, okay, let me give you a bit of educational lesson as well, okay. I hope, if you're watching this stream now or you're watching it back, take some notes. Okay, remember these markets are made up of capital flows. You're going to hear me say the same things in different ways because I want it to stick in your heads. Okay, I need this stuff. The only way you're going to do that is me constantly talking to you. Okay, constantly saying these things to you so that it can ingrain in your head and become second nature. So remember, these markets are made up of money flows. Guys, people are looking for yields. Okay, rates in the UK are higher. What did we just see the rate cuts being cut to? 4.25%. What are rates at the moment in New Zealand? 4.5%. What are rates going down to potentially? 3.5%. They're going to go down to 3.25%. The rates are also the yield, okay? What foreign investors can earn, okay? Rates are higher in the UK than New Zealand. So there's already an edge there for GPNZD at the moment. There's already an edge, okay? The second edge is UK, US agreed that trade deal, right? Keir Starmer of the UK Prime Minister bent over and was like, do whatever you want to me, Trump. Sorry to be vulgar, but it's fucking true. The guy doesn't have his own mind, and obviously Trump comes flexing his guns, and then when you got a weak person like that, they're just going to do whatever's necessary. So anyway, they agreed a deal. That's some uncertainty out of the way for the UK. They've agreed a deal with the US. Okay, but China and US is still a little bit shaky. We just never know. So that could have an impact on New Zealand. So investors, you see, obviously everything that I'm thinking, minus the vulgarness, everything that I'm thinking is what a big boy will be thinking, okay? They're going to be thinking about all these risks. Where is it best to put my cash versus this economy or this economy? And I think GPNZD. You see how I just went all around the houses and now I'm back at GPNZD chart. So on the weekly, look at the structure, guys. It's bullish. I know it's been a bit aggressive, right? That GPNZD, GPN Aussie, they move like that. They're aggressive. You have to know how to tame the beast. So we're printing higher highs, higher lows, structures to the upside. Arguably, we've printed a new a higher low. It just, I don't know what happens when I mention higher highs, higher lows, lower lows. Like my brain just like freaking just almost disables itself for a moment and then comes back to life. So anyway, we're printing a new higher low, expecting this to carry on pushing to the upside. On the daily, I don't like this price action. I really don't. It's consolidating. When we've got this range-bound price action, I know some people like range trading, but I don't like it. Okay, I'm looking for nice breakouts. So this is what I'm waiting for here. I'm waiting for a breakout of this. I think we might have mentioned this on a previous stream, and here we are today still waiting. All right, and this is the nature of the game. This is trading, baby. We're paid to wait. We're paid to wait for those setups. Allow them to come to us. You see, I'm not just jumping in, like most people will do and get their fingers burnt. I'm waiting, okay, because when it comes, it's going to reward me, hopefully. Can't be guaranteed. But I'm looking for this to break out, as I said here, and just carry on and go and print a new higher high. Go and fill that wick and go and print a new high at, maybe psychological next 3.5. I'll be looking at around 3.5. I will just go for the high just to be conservative, around 2.34, excuse me. This will be the trade that I'll take once we get it. If I just put this on a daily for a moment, because it is a daily trade, really. It's a swing. It's going to take some time. So I'll just be going to those highs there. And in terms of stops, once we get above, I'll just probably leave a brief, not probably, I am going to leave a bit of breathing room below. You see this trend line here. And the reason I'm doing that, guys, is just in case, sometimes we go for a push above, might get a bit of manipulation, just like a little retest, just testing the guys, taking out some stops, and then carrying on, pushing to the upside. Sometimes that happens. When we've got levels that, the mass psychology, the herd, the sheep, and I'm being the sheep here. I'm looking at these key areas. these big boys, it just happens. You're gonna get manipulated. It's just the nature of the game. So I'm always sort of thinking about where could I potentially have that stop just to accommodate in case of that manipulation.
Right.
So yeah, be looking at those longs. Okay.
That's
Oh, you're back.
Yeah, I'm back.
Ken,
I'm back.
before I pass the mic to Wally, I have one question there. If tomorrow the GBP is going to, sorry, the GDP is going to print lower than what was expected, are you be still bullish on the pound? Because if so, and the retail sales also show lower numbers, we can have lower inflation print then. Are you also expecting like more dovish Bank of England and possible like not as bullish scenario for pound?
It's a very good question, Jake. Now, I'm going to answer that. So, in the near term, okay, thinking as the markets are going to think, now I know how the market's going to react. If that number's bad, very near term, as in that day, I think we're going to see pound downside, okay? The reason being as well, it will an injection of worries about stagflation, where growth is low in the UK, but prices are still high. But then I'll be thinking how the central bank will be thinking, and these guys are very, very focused at the moment on wanting to bring down that inflation. So yes, we'll see some volatility because the number's negative. We've got fears of stagflation, but then I'll be thinking these guys are going to keep rates higher. So I expect that pullback to be bought because the bank are going to be like, we'll probably see some members coming out maybe over the next couple of weeks. Be like, look, we still need to bring down inflation. Unless inflation comes down, or wages come down as I just went over, I'm going to remain bullish for pound versus certain currencies. Yeah.
Okay.
That's awesome.
Do you have also any other pairs, or shall we now like pass on to Wally, and then probably like
pass on to Wally.
Okay, perfect.
Yeah, pass on.
All
Just
right.
for the viewers,
Let's get into it.
No problem. Yeah. So just for the viewers,
All
we
right,
also
all
have
right.
a successful trader with us, Wally, who has been trading with the end markets for, is it now more than 1 year?
Yeah, about a year plus.
Yeah, and who's already have some payouts with us. So he agreed to also share his analysis, his insights and tips from his journey to you guys. So I'll just leave it up to him. Are you already sharing the screen? Yeah. No, yeah, not yet.
Just give me a minute.
Yeah, take your
Not
time.
yet. Just a minute.
So,
you're frozen on my side, Jake.
sorry.
Frozen, yeah. Wally, is Jake frozen for you?
No, I can see Jake.
Yeah.
I'm just trying to pop up my screen.
Am I frozen, Jake?
No, you're okay. You're okay. Everyone, I think, is okay.
Okay, cool. All right, good stuff. Good stuff. Make sure.
Are you looking for any other longs on pounds other than pounds? I mean, or just pound is right now your priority again?
Yeah, right now pound is my priority. I haven't really got anything else on the watch list for the time being. Yeah, just GBP and gold. I'll be keeping an eye on gold.
Yeah,
those potential dips that I was explaining. Yeah, but yeah, that's it.
Hello.
Yeah, we can see probably we can see the screen sharing.
Do you see my screen?
Yes, I can see the chart.
Awesome. All right. Yeah. Once again, my name is Wally. I've been with ES for about a year plus, and it's been an amazing platform to work with. So when I got this opportunity to be able to share my insights with the community, it was a no-brainer for me. For me, I'm purely technicals. I spent almost the last decade studying the market technically and preparing for certain A-plus setups, which I've identified in the market. So my approach to the market is pure price action, and this price action over the years has been backed with research on how the market behaves in certain patterns, how the market reacts to certain patterns, and move, how price action moves and respect certain patterns. So for a price action trader like me, there are only three things I look out for in the market. I'm looking out for massive breaking structure, identifying the market structure, massive breaking structure. I also want to see, identify my point of interest, and I also want to be able to identify my entry. When I fair value gaps or other blocks, they're gonna help me. So this really helps a lot. So when let's dive into the pound yen GBP JPY, one of my favorite pairs. If you've seen what's been going on with this pair over the last few months, we've been seeing a lot of consolidation, and this consolidation here is just a correction for this heavy drop here. So this heavy drop here tells me since July of 2024, that's about 9 months now, the market has been in an overall bearish direction, which has been backed by rejection at this major resistance level. So you must be able to identify your major structure, key levels, support and resistance, and point of interest. That's for a pure price action trader like me. So on the higher time frame, from daily to weekly to monthly, all I've been working with is this direction of the market. So major drop here, and all these have been corrections for this drop. So I've been getting short-term entries, intraday entries based on this correction. Now let's go into early this since last week into like early this week. If you read my analysis last week, I projected GPP JPY was buying, and I'd been in this trade from this position. I've been taking it from this position one day at a time, grabbing entries up to this level. So in all of this move, in all of these rallies and pullbacks, I've always known I'm trying to buy into these key levels, this key level. And why did I identify this key level? This particular key level for me aligns with one of my A plus setups. So when you study the market so much, you're able to identify certain setups and how the market behaves. So when the market drops this way and breaks out of this pullback, I identified that once the market started to reject from this level, from this key level, when it started to reject, I'm going to rally back for liquidity to be grabbed. The market respects liquidity a lot. So key levels, liquidity grabs them. So once the market rejected here daily on Thursday last week, I was able to grab some buys. Which I've been able to use to pass my phase one or my 200K challenge. Also, the market also rallied through Friday into Monday, and into Tuesday, we got buys to grab this liquidity. So at that point, we can, take a step back and wait for the market to react. But I know something is happening. From experience, I know what is happening. In all of this, like I mentioned, all of this right here, all of this is a correction to this drop. But there is an A plus setup which I've always traded over time, and which I can now see forming up in GPP JPY, and this is it. So when there's a major drop, there is some correction. Then you see a breakout of the correction. When you see a breakout of this correction, don't be too excited, because there's always a breaker block, other block hiding in the corner, which the market is waiting to reject. So when you come to the daily on GBP JPY, this is it. Your textbook setup. This is it. I can see the other block hiding right here. So all of this correction, there are two things that are going to happen in the market. Like I believe, you trade what you see, not what you expect. But in as much as you want to trade what you see, it has to align with what you expect, right? So in all of this correction, I'm expecting some buys, some breakout buys into this breaker block right here. And this breaker block is really going to determine if I'm going to take more longs or now take more shorts, which align A plus setup right here. So what is going to happen in the market, what I expect to happen, backing with fundamentals, I expect some more rallies on GPP JPY. I expect it to break out of this channel, and this is my point of interest, where I'm expecting to take a major decision. If market is gonna reject from that area, or we're gonna take more buys. So right now, what we can do is wait. we've completed these buys right here into this key level. So a few things have held the market hostage. You can see this area, this order block area right here, this resistance area. The market pulled into that. Oh, sorry. Is my screen back on?
Yeah.
Hello, can you hear me?
We can see your screen.
Awesome. So this is a key area of resistance. This area has been holding the market hostage for some time now. This area of resistance. This is a key area of resistance. Market rallied into that, rejected, rallied back, rejected. So now market has come to tap it again, rejected. But like I also mentioned to you, on the daily time frame, this area is a breaker block area. This is also a key area. So how do you take advantage of this? Now, we've taken advantage of those buys into this liquidity area. And as you see, the market has rejected it. So what do you wait for? When market rallies into an area of resistance, you have to wait. The resistance was not broken. The trend line was rejected. We still aligns with this. Now, how do you move from here? That's the next big question. Now, if you look closely, there is also another break of trend line right here. I mean, trend lines are just a part of my confirmation, but three things are very important to me: structure shift, key area support and resistance, point of interest. So how do we move from here? Where are we? How do we move? How do we move forward from here? Now, obviously, we've been seeing break of structures. Higher low, higher low, another breakout, higher low. But that higher low, the high is still respecting this resistance. So what I want to see, we've got some GBP news coming in tomorrow. We've got PPI coming in tomorrow. So I want to see how the market is going to react to this area of resistance. If I see the market take out this area of resistance, create a new high, a pullback, then I know I'm also going to be looking for new buys into the 203 area. And the 203 area respects my breaker block right here. So this area is a very key area for you all. In as much as the pound is bullish based on fundamentals right now, you also need to understand that overall, backing from weekly, daily, all what we have here is a bearish market structure. All of these are just in a correction and a pullback, which are short-term buys. But those short-term buys have been going on for weeks and months. But on the bigger time frame, this is a major point of interest. So we need to see this taken out. Then if this is taken out, this trend line is broken, then we'll also look for buys into this 202.8, 203 level. So this is another key area where I'm also going to be expecting the market, to either break out for or to reject and tank. So that's how I'm going to be trading GBP, JPY in the next few weeks. Let me switch over to GBP USD. GBP USD has been exciting for me as well in the past few weeks. Also trading one of my regular A+ setups. Once the market broke out, once I saw this, once the market created this push to the downside. Okay, 1 second. Let me take it out from the monthly time frame so you can see what's been going on from time. Okay, so if you look closely on the monthly time frame, the market rallied down, made a correction. The market rallied down, made a correction, bounced off that support, created a new low. So there's a break of structure here. Pulled back, created a new low. So for now, the market has been creating lows on GBP JPY, on GBP USD, been creating lows. But in as much as the market is creating lows, you must understand that for every major market shift, there is a correction. So the market can break this low, but as an intraday trader, you can take advantage of the buys as a pullback. And that's what's been happening with GBP USD from the monthly. Once you break it down to the weekly, it's the same thing. The market respecting higher highs, higher lows as this, as this pullback has been going on. But something is going on here. You got to be careful. This area is my major area of is my POI, point of interest, which I'm looking out for to see how the market reacts and respects it. So when I break down to the daily time frame and the 4 hour time frame, which as an intraday trader, that's really what matters to you. Um, when you see market has completed this cycle of movement and grab this liquidity, but no, it doesn't stop there. So what we've seen the market. I'm still, I'm pushing for more buys into the 1.3, 1.37 region, which is my point of interest. So in as much as I'm pushing for more buys, the market has started to give me, a bit of confirmation. I've started to see the market reject key levels again to continue to support the buys. And that's what we've seen here. Market rallied into this resistance, pullback. Now, this key area of support, which has become resistance, uh, I call it RBS, resistance becomes support. So this area of resistance has now become support. Now, I'm going to break it down to the 4 hours. So this is what has been happening on the 4 hours. Now, right here, this is a breakup structure. Easy peasy. That's a breakup structure. Now, that structure has been broken. The market has, has done a bit of correction. Now, what made the market reject at this level? If you go to the daily, you're gonna see this is a key area. Liquidity has been grabbed here on daily and 4 hours, and you can see the order block that has rejected the market. So this is an order block. This is a major area of resistance becomes support. This is a 4 hour order block which the market rallied into and rejected. Liquidity, this is an internal range which has also been grabbed. So where are we now? The market has corrected. It has grabbed the POI, which is a order block. It has grabbed liquidity, internal rate liquidity, and has created new highs under 1 hour. And also, if you look closely, see what's happening right here. This trend line also been shattered, taken out. So the confirmations are starting to come in. The buyers are starting to take momentum. They're starting to come in. So now, what is your first target as an intraday trader? What is your first target? You're looking to smash this area of resistance and liquidity, 1.344. If you read my weekly analysis last week, that was a major area I identified. So you can try to squeeze in your buys into 1.344. Now, confirmations are jumping in, easy. They're jumping in. Breakup structure, liquidity grab, resistance becomes support, order block on 4 hour, market has rejected. If you look at yesterday, this is a daily, this is a tweezer bottom, which is two opposite candles rejecting at a major area. So the buys are coming in. Trend line is broken. So what do you look for now? You go to the lower time frame, 1 hour, 4 hour, you start to see where is your point of interest. So also look at this resistance has been broken and market has found support. So this is a major area for me. I'm going to tell the market reacts. Tomorrow is PPI. I don't stay in the market during the news. So two things are important. My trading is very simple. Price action, major change in structure, key levels, point of interest. And I also work with the news. So when you see the news, today I didn't really take any trades today because I needed the market to correct and react. But tomorrow, Thursday, 2 a.m. Eastern Time, Toronto, American Time, we have the GDP news at 7 a.m. UK time, 2 a.m. You shouldn't be in a trade. You should let the news come and go. Let the market come to you. Let the market come to you. You don't chase the market. 2 a.m. there's a red folder news. Stay out of it. Now, London sessions kicks in like 3 a.m. New York, 3 a.m. Eastern Time, 8 a.m. in London. Then you can start to look for entries after this 2 a.m. news. That's London session. 3 a.m., 4 a.m., 5 a.m., 6 a.m. You can be in the news. And you should prepare to get out of it by 7:30, 8 o'clock because there is a PPI by 8:30. There's a PPI by 8:30. There's Powell speaking by 8:40. So you don't want to be anywhere in any trade by this time. You want to be out of the market by this time, between 8:30 and 8:40. Then by 9 o'clock, 9 a.m., that's going to be a closure of another 4-hour candle. Now, guess what? It's a safer terrain for you to play. The GDP red folder news is gone. The PPI is gone. Powell has spoken. You have a 4-hour candle which has closed and which can now give you a bias to see where to head to. We've been speaking bias. Ken has given us the direction fundamentally for the GDP. Technically, it's backed. The pound is rallying. I mean, we are just analysts, right? But you have to wait for the market to react. So we are seeking buys, but wait for the market to react. So 2 a.m. tomorrow, you shouldn't be in a trade. Once the GDP news is gone, look for a trade in London. Before the PPI news, get out of it. Once the PPI comes and goes, once Powell speaks, then you can also get a bias for where to go. But I'm leaning towards the buys. I'm heavily leaning towards the buys. Fundamentally, technically, these are A plus setups. GDP USD is definitely gonna smash 1.344. You can take that to the bank, easy peasy. It's gonna smash 1.344. So that's what I'm looking for. And once it smashes 1.344, my next key level is 1.37 for GDP USD. Then at that point, you can now start to see what the market reaction is going to look like. This is a danger zone. You can see there's a lot of other blocks for the institutions are very important. So there's a lot of reaction here going on in this area. So 1.33, 1.37, 1.38 is a major area which we're going to see some rejection, or we're going to see the market smash through it. But once we take our 1.34, this will be our next target, 1.37, and we can see how the market reacts after that. So that's JPY analyzed, GBP USD done. Now gold, one of my favorite pairs, gold. Gold has been beautiful for gold traders. Since last year, it's been rallying and rallying and rallying. And like you know, once it's in fundamentals, they say once there's geopolitics, you buy gold. Once there's inflation, you buy gold. It's a safe haven. But in as much as it's a safe haven, technically, it's also been back. It's also been back. What has happened technically from last year? We're saying this is a clean bullish flag, which traders have used since last year to milk this buy on the monthly time frame of gold. So you see, so once this showed up, and the market broke out since the first Q1 of last year, it's just been buys upon buys, which have been backed technically by this bullish flag. And fundamentally, we've also seen it back with the wars, with the tariffs, the wars. It's just keeping. Hey, investors are leaning to gold for safe haven. But where are we right now? Where are we right now? Where are we in the market? That's a big question for gold. We've seen a lot of rally in gold. We've seen a lot of rally. There is a break of structure right here. There's a break of structure right here. You see, and the market just even tapped into that area. There's a break of structure right here. The market is valid. The market is valid. Broken structure. We've seen this pullback. All of these pullbacks are corrections. Now, how do you take advantage of the current situation? Now, there is a breakout. There's also this trend line being respected here. So two things can happen in the market. Now, let's go to the 4-hour and see if there's any point of interest we're supposed to look out for. So there's a other block rejection right here, which also aligns with this trend line. So we want to see, for you, it's very important to see liquidity grabbed before you continue your rally. So if you're leaning towards the buy, you always want to see liquidity grab. And where does the market grab liquidity? The market grabs it on fair value gaps or other blocks. So you identify your break of structure, which we've identified here. For now, it's still saying buy. This resistance has been taken out. This is a massive structure shift. So what are we waiting for? We're waiting for the market to grab liquidity. And we're waiting to see where's our liquidity, where's our point of interest on the daily, on the 4-hour. You can see it here. There's an order block rejection in all of this area. So this is a key area for us, for the market to reject. And if you look closely, if the market does this, if the market does this is also the trend line, and this is the order block area. So if the market does that and rejects, then we can say we can start to find buys back into this area for a start. But if the market takes this out, then we are looking for more shots into this level. So with gold, geopolitically, inflation, we've been bullish. we've been bullish on gold. But for how long, how much more can we be bullish? That's a big question. We're bullish. We've topped psychological level 3,500. I still want to see the market take a bit of rally into 3,600, but it's not what I want. It's what the market tells me. It's the confirmations I get to see. So even if you look at it on the weekly time frame, this is just a pullback. This is a pullback for this bullish rally. We see this trend line. Let's see if it's respected. And yeah, that's where we are currently in gold. I still expect some more dips. If you look closely, today's daily candle has closed below this resistance here. So I wouldn't be surprised tomorrow if we take some more dips some more dips into this key level before we start to look for buys. But this trend line is very important for us. It respects our order block. It's a trend line. It respects a trend line for a long bullish rally. So this is a major area to see if we're going to bounce back and take some more buys into this 3340 region, or we're going to, break it and, get the correction, which a lot of traders and investors have also been looking out for on gold. Yeah. So that's what I look out for the week. Yeah, tomorrow is very important. CPI is gone on Tuesday. Tomorrow is PPI. We've got Powell speaking. Yeah, you just got to take it one step at a time, one day at a time. Wait for quality setups that makes your fundamentals correlate with your technicals. That's where we are right now. So just take it one day at a time, one setup at a time, one step at a time. I'm gonna do a recap of it all for GBP JPY. We're waiting to see how the market reacts to this area. This is the key area. But what I want to see how the market is going to break out of this and we'll take some more back to the 3 level. Which the market is also will be ranging, so we can also see the market reject, fall a bit more, but leaning towards the buy for GBP, JPY, for GBP USD.
What your mic is very low. Your mic is very quiet. But basically, what I get from both of you is both of you are pretty bullish on pound.
Yes.
As well as Ken as you. If also tomorrow's GDP numbers show up to be positive, in case we go to negative numbers, that might change the scenario. But so far, positive or bullish on pound and also gold. Are you also bullish on gold as well?
Yeah, I am bullish on gold. I'm waiting for, as I noted, I'm waiting for buy opportunities at the moment. I think, as I say, for me, I'm looking down at around sort of 31.50, maybe 3100. Some dip buying come into play. Just looking for that signs of reversal,
Yeah, that's mostly from what I've reviewed.
That's where we are right now. Pardon? What did you say, Jake?
No. I was just saying that most of the traders that I review the markets, most of those successful traders, they are trading gold. And if you take a look at like position size and not position size, the long side or short side they take, they mostly go long on gold, which I think trending market is the best one. Just wait for correction to reverse or just enter in the trend, and the gold is like one of the most traded instruments in the market, and most of the successful traders are trading the gold, which I would advise to as well.
Exactly.
Yeah.
Nice.
Okay, so thank you guys for the analysis, and not latest, but right now I would like to introduce our new performance coach, who is also going to launch and introduce a new project that we are preparing with EAD Markets. I think that the best way he can do so to introduce himself. JV, if we can hear you.
Absolutely, Jake. Thank you so much. Just confirming, can you guys hear me well here?
Yes, we can hear you perfectly.
All right, loud and clear. All right, guys, I was listening to you speak, and let me just say, you both are very, very knowledgeable, very great traders. I can tell from the perspective of another trader, the way you speak about the markets, the way you talk about the things you know, and the way you actually perform, it's fantastic. And I'm so glad, and I'm so excited about being part of this company, right? Been working with E8 for over a year now, probably more, probably a year and a half in this specific project that I'm going to be talking just a few minutes about. Myself, it's just simple. Been trading the markets for the last, 10 years or so. and I'm in love with finance since as long as I can remember. Probably I don't remember. I think it was 2011 or 2010 when a friend of mine just said something about the stock market, and I was like, I was hooked, immediately hooked. So 20 years later, I'm here and been trading the markets for a while. But then I like to read, and then I started noticing that it's not the information that makes a trader, even though knowledge, of course, some say knowledge is power, but even though it's not the information, it's the experience, right? That makes us perform and that makes us have the results. It's the doing. It's the not the knowing, but actually doing. So, uh, talking with the founders of the company about a year and a half ago, we decided to start working in this program. We call it, and let me just share with you guys here my screen. If you see it, hold on.
Take a while till the screen pops out. Yeah, I think it's already loading.
I'm not sure.
Yeah, we can see our screen right now.
Okay. Just Jake, if you can hear, if you can help me just to
Yeah,
make
you need
sure what is the screen I'm sharing.
Yeah, you were sharing the entire screen, so everything. If you want to do separately, if you want to share something specific, you need to click the arrow next to the screen sharing and then choose the screen that you want to share. Do you want to share the presentation? Or
Okay. I think I got it. Hold on.
yeah, right now you're sharing entire screen, so
You know, well, as you guys can see, I'm not too tech savvy. Maybe Jake, if I can send it to you, and then you can share it from your side.
sure. Is
All
it a
right?
presentation or
No, it's not a presentation. It's
it's
just
the image? Yeah.
just an
Okay.
image. So
Okay,
I'm
send
just
it to
sending
me.
it
I'll
to you
prepare
right
it.
now.
Sure.
Yeah.
Till I have it right, till I have it done, you can continue as you were.
Okay. So there you go. You already have it, and maybe you can share it. Sorry about that, guys. So okay. So what about the program that we're working on? It is called the Trading Performance Mastery Program. Maybe some of you heard about it or saw a video that we posted in late 2024 around Christmas time, and we were talking about attention, and we were talking about presence, we were talking about mental capital, and many of the comments that we saw posted, they were like, "Whoa, this is kind of new." It's like, "Oh, it's a great concept. Thank you, thank you." So the thing is that traders are decision makers, right? And we're all the time analyzing charts, and we're all the time processing information. But I'm here to ask you a very important question. Who makes your trading decisions, right? With all this information that we get from social media and right, the X, previously Twitter, YouTube, we get Instagram, and we get all this trading chat groups and trading communities and whatnot. We have so much information, but sometimes we need to just turns out that we just need to push a button, a buy or sell, and make a decision. So in my experience, in my journey, what I've learned and what I've discovered is that what really matters is, at the end of the day, it's how well you make decisions, right? And this is just another world in which we can um, show you how not only about technical analysis or fundamental analysis. By the way, Ken is it's the master in that. You guys heard it many times talk about fundamentals, and man, every time he talks, it's like a master class on fundamentals. He's great, right? But besides that, or besides technical analysis, there is, and I would say there's a secret behind profitability that we all yearn for. even if it's your first month or your first week in trading, or even if you've been trading for 10 years and then you're in a losing streak, you have to go back, or you want to go back to profitability. That's what you're looking for, right? So there is one factor. If that is the case, if that is the case for you, that you've not found profitability yet for whatever reason, or if you're in a hump in which you know you're breaking even every time, and you're getting your challenge passed, and then once you hit live, you're nervous, and then you blow the account, and there's a performance thing that you need to understand, and something that's hindering your success, right? So people tend to go to trading psychology, and they read psychology books, and the Mark Douglases of the world and whatnot, and all of those things. However, and that's fantastic book. Don't get me wrong, the trading the zone thing. However, trading psychology, in my opinion, it's a thing of the past. It's not that it doesn't work. It's not that it's not going to help you. The thing is that trading is not a psychological or mental game only. It's a performance activity. As in sports, sports psychology, as in high performers of the military, as in high performers of other people that do, high performance activities, like a pilot piloting an airplane full of, 700 passengers, or a, heart surgeon, that after 25 years of performing operations in people, they like really know how to perform. And it's just not knowledge, it's also the experience. So it's like a very wide world in which we're going to be talking about performance for, in the first place, the aspiring traders or the newer traders, to gain clarity about what they want to do, what they want to achieve, right? To talk about their goals, to talk about their ideas, and to talk about their trading personality and things that are very important in the beginning of your career, as well as for the seasoned traders, right? That need that consistency ingredient in their trading, right? That they're not yet there yet. They cannot make consistent profits, or they're in the boom buster cycle in which they get a lot of money and then they lose it, and they're struggling to keep it. So it's not just one topic. The Trading Performance Mastery Program, it's, as the name implies, it's a program. It's not just one mindset course that you're going to be able to work on for just 2 or 3 weeks and then be done with it. It's something a lot more. It's a lot bigger. It's a lot more complex than that. So we thought of different modules, and this is what we're going to be talking about in the intro call. And if Jake, you can share the picture that I just sent you.
Yeah, if you because I'm live streaming, so if you can share the screen you shared it before, and you go to announcement channel in our Discord, I've just posted it into announcement.
Okay.
I'll navigate you. If you share the screen as you did last time, I can navigate you.
Okay.
Yeah, it's already there. Watch the stream. Okay. And now if you go announcement at the top, a little bit down. Yeah, there you are. And you can click the image. It should be okay.
Okay, fantastic. You guys see it?
Yeah.
You guys see it now? Fantastic. So it's called the Trading Performance Mastery Program. So guys, something big is on the way. So stay tuned for the intro webinar, which is called the Ultimate Edge, on May 28th, in exactly 2 weeks. We're gonna confirm to you the exact time we're gonna be doing this live webinar. It's gonna be live, and we're gonna be talking about, and I know it sounds cliche, but it is a secret, a hidden secret behind your profitability, and why trading, it's a performance activity, and what that means actually. So I'm sure you've heard it before. Oh, trading performance, but what is it really? Like, we we talk about it all the time, but we might not know exactly what it is. We're going to be talking about also a great story that maybe some of you have heard about. Great traders to go like super big billions. No, I'm not talking about hundreds of thousands. I'm talking about billions of dollars when traders go bust. It's just crazy to hear these, real world stories. And we're going to dissect all of these things so that you understand and so that you get a clarity on what we're going to be offering you here throughout the program. And also we're going to be talking about the time we're going to launch it, which is going to be around this time in the summer, and how you can be a part of it. This is definitely not thought for someone that's just looking to make some good profits and then just be done with it. We know that there are out there people that want to become real professional traders, and people that are in this call that have been doing this for not 1, 2, or 3 years. We've been doing this for over a decade probably, right? We know what it takes to become a professional trader and to be committed with this activity and this great money making thing that we call trading. And I believe you're going to love it. I believe you're going to love it, but you need to be committed to something from the beginning. The webinar is on May 28th, and then I'm going to teach you, and I'm going to show you what the program is and how you can be a part of it if you have the commitment to go through the entire thing. I'm going to explain everything, but for now, it's great to be just part of this call. To thank you guys to allow me to quickly introduce myself and to talk about this great project that we are going to be launching next summer, because there's so many competition out there in the realm of prop firms, right? And lately, in the last couple of years, we've seen all of these companies, I don't even know the names, popping up everywhere, and we don't know exactly what they're after, but we know they just like offering you whatever, right? In E8, and that's one thing I can tell you for sure. Since the very beginning, we have very clear principles. We have very strict idea of who we are, where we're going, and the people that we want to share this with. And if you're in there, like if you want to be a real professional trader and learn not only just real good technicals, because real good technicals, there's a million YouTube videos out there, fantastic, but you need something else. And guys, I kid you not, there's nothing like this out there. No one is doing it. No prop firm is actually teaching you how to become a good trader from the performance side. No one is doing it. We're going to be the first company doing this in a very professional, very down to the detail kind of thing, in which you're just going to learn how to really understand position size, understand what is edge, understand what is risk management, understand how to use your intuition. Man, so many traders don't even believe there's intuition, and they say intuition doesn't exist. That is hilarious. Anyway, there's so many things that we're going to be teaching you in this program, and if you want to be part of it, we're going to talk about it in detail next May 28th. It's exactly in 2 weeks, so that you understand what is the Trading Performance Mastery Program and what is the background of all of these efforts that as a company we're doing. So all right, so that's going to be it for myself here, Jake. And if you want to say something else and just compliment.
For the introduction. I mean, I've started watching your videos, and what I like the most is within the first video there's a sentence or quote, the trading is a business of decision making, which I love really a lot. So I'm looking forward for the reviews of this program, and also everyone will get more information about the program once we have at least the first webinar to introduce it a little bit in depth, in details. Also, thank you very much, Ken and Wally, for your analysis. You can watch Ken every Monday in a Fundamental Talk, and I think we are preparing one more video per week to share you more from fundamental analysis, so you can teach it, so you can learn it, as well. And thank you, Wally, for your technical perspective on pound, which, as we can all three agree, can be bullish this week. Yeah, thank you very much, guys, and we'll see each other next Wednesday.
All right. Thank you, guys.
Awesome, guys.
Enjoy the rest
All
of
right.
the week and trade.
Thank you. See you next week. Bye.
See you guys.
See you guys. Bye-bye. Have a good day. Hello, Jake.